everyone, this is Rob Roy, and welcome to the Elliott Wave Options S&P 500 US Market Update. I want to come back in and update you on a couple charts that we haven't looked at in a bit. So let's take a look. And if you're new around here, don't forget to subscribe and give us a like. You'll get the latest US market updates as soon as we post them. At the time of this recording, it is 1:25 a.m. Eastern Time on Sunday night / Monday morning, and at this moment the futures are up 30 points, so pointing to a slightly higher open on the back of some comments that Fed Chairman Powell made on a news interview this evening. I'll talk more about that in a minute. And before we get to the charts, thanks to everybody for participating in the favorite Chuck Norris movie contest. To win a free 12-month subscription, please check the comments section under this video for the name of the winner. Thanks again for playing. Taking a look at the chart, you all know about the 61.8% level that the market's bumped its head against a couple times. Thought I'd add on the moving averages. You can see that we've closed basically 3 straight days right on the 10-day moving average, the lime green line, and above both the 30 and 50-day moving averages, but we are still below that 200-day moving average, which happens to be right at the 300 level on the SPY and where that gap is. But what I wanted to do is look at the weekly chart. Elliott Wave, if you're familiar with Elliott Wave, one of the core concepts is follow the higher degree, meaning always pay attention to the next highest time frame. So I thought we'd look at the weekly chart, and you can see, again, the importance of that 61.8% fib corrective level, where basically for the past 3 weeks in a row, the high has bumped its head against that level. We did have a gap here in the weekly chart that has been filled, so that's done. And then I thought I would add the moving averages on here as well, and you can see a little difference. We're above the 10-day moving average, but still below the 30 and the 50-day, which we've kind of bumped our heads against, along with that 61.8% level over the past 3 weeks. But when you put the 200-day, we are above the 200-day moving average. But it's a pretty clean looking pattern as we wait to see if we're going to move down in that C wave extension, or do we move up and violate the or disqualify the downward zigzag, which means, again, a move back to the previous highs. Noting that we did have above average volume over this past week. It was a down week, but not by a whole lot. We've kind of just been going back and forth here, and there you can clearly see that we've closed at pretty much the exact same price that we closed in mid-April. So the market has gone nowhere for the last month. Another chart we haven't looked at recently is the chart of oil. Talked about this a couple recordings ago, how we had finished the wave 5 and we're moving our way back up, and the target was likely the previous 4. Well, we're pretty much there now. I don't think you put a whole lot of weight in this one bar because the high of the day was up here. It closed way down here, right in all of this consolidation or congestion, which was also support resistance going back even into March. So we've done what we're supposed to do. What happens now? Well, we wait to see what the new Elliott Wave pattern is. This could be an impulse move to the upside, a correction and another move higher and a zigzag to the upside, or that could just be the end of the completion of this pattern in the correction, and we wait for a completely new pattern to set up. The market will tell us, but this is one of those areas where you kind of take a pause and let the Elliott Wave pattern come to you. One other thing I wanted to show you was a chart of the VIX. You can take a look at the VIX. We had noted that there was this downtrending channel, and if you were looking for the market to go higher, this was something to hold your hat on, because a nice downtrend doesn't always mean that the market's going to go to the upside when the VIX goes down. We could move lower, just not in a very volatile fashion, and have the VIX creep down, but we're getting back into an area where more often than not, a move down in the VIX would be corresponded with a move up in the market. But we tried to break out of this channel back here on Thursday, and we didn't do it. We closed well back within the channel, so the down channel still holds. I mentioned earlier about Chairman Powell. Thought I'd go ahead and show you this chart too. Kind of an interesting chart, just a nostalgia thing here, if you will. As the Federal Reserve was raising rates, this is the Fed funds rate. We talked about the Fed fund futures, and Chairman Powell again tonight said they weren't currently looking at negative rates. But remember, the Fed fund futures didn't talk about that till December. A lot of time between now and then. But going back into 2006 and 7, Federal Reserve was raising rates. Boy, we got above 5% on the Fed funds rate. That seems extraordinarily high now, doesn't it? And historically, it's not. And then we had the great financial crisis. We came down to, I think we were at 25 basis points, where we stayed until they started raising rates again. 2016-17 started moving back up, only made it a little bit above 2% before the coronavirus, and now they just cut to zero and said that's where we are. So thought I'd pass that on the back of the fact that Chairman Powell's comments that drove the futures to the upside were the fact that the economy may need more stimulus. So I think the market looked at that as more liquidity heroin coming in. There's a lot of talking about how the market is basically addicted to the Fed liquidity right now. So kind of a slang term, as they call it, market heroin, the liquidity that they put into it. Kool-Aid, maybe a calmer term, but regardless, the market likes the Fed liquidity. It's being injected. Hope you've had a wonderful weekend. Be back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.